welcome to this Wednesday at 2 session, live for PCD members. We're joined by an audience here on Zoom and a larger audience on YouTube. To welcome to you all. Looking forward to a great session today where we're going to discuss a whole range of topics linked to Malta. We're going to talk about Brexit. We're going to talk about innovation in financial services. We're going to talk on funds, relocation, the whole gambit. And we're really looking forward to bringing this discussion to you as we do every week for international private wealth advisors. We've got a great panel to discuss these topics with, which we're going to bring in a minute. As always with PCD content, we love to hear from our audience, particularly on Zoom. Let us know if you're where you're watching from, what your comments are, what your questions are. After 45 minutes, we're going to draw the YouTube broadcast to a close, and we're going to head off into breakout rooms for networking with our PCD members and our esteemed panel. So look forward to the next 60 minutes. Hope it creates a bit of value and insight and helps you drive your business forward. So just to open up the discussion, delighted to be joined today by Andy Wood from ETC Tax up in Cheshire. Andy, good afternoon and welcome. Sorry, you're on mute there, Andy. Sorry. It's the phrase of 2020. You're on mute. Good afternoon, welcome.
An inauspicious start. Yeah, I'm good, thanks. How about you, David?
Very well. So, yeah, what we wanted today, Andy, really was to get a kind of UK tax advisor view, an off-island view of what's interesting in Malta for private clients and SMEs and the corporate sort of clients that you might deal with, and just to sort of unpack a few of those interesting elements. So you've dealt with clients who are relocating to Malta. I mean, firstly, on the tax side, what do you think is most interesting about the regime and how clients can utilize it?
Yeah, well, I mean, you mentioned an off-island view. I am based in sort of Cheshire in northwest England, so quite a bit away from the island. And I do, as you point out, speak as a UK tax advisor and barrister, but I suppose whether it's interesting or not will remain to be seen, I suppose. But the interesting element will be that I do have internationally mobile clients, and therefore I do find myself looking for international solutions, international expertise from time to time, and just so happens that actually I'm looking at Malta as a I suppose a base for a high net worth client at the moment, but looking at places around the world to reside, set up a business, or create an investment structure is relatively common. So I guess I'm not coming at this as a Maltese tax expert, but in the capacity of I suppose I was going to say a fiscal tourist, but I'm not sure that's right. I think it's more like a tour guide. So I think I'll go for that analogy that I'm a tour guide. So I'll get my golfing umbrella and sort of wave it around, and you can follow me. But I think there are a number of tax elements. I think starting with the personal tax position, so the general tax position, I think makes, or you've certainly got to have Malta pretty high up on your list of places for people to make as their tax base. And I think it's probably worth touching on a slightly different concept of tax nomads later, David. So it might be worth bringing that up as an issue. But I think Malta does fit the bill as a place to create a tax base if you are looking for one, that is. And although I suppose a top rate of personal tax at 35% is not necessarily something to write home about. I think what is really attractive, and notwithstanding the fact that there are reduced rates for water polo players in in Malta, which I think is water polo's a very popular sport in Malta. But notwithstanding that, I think the remittance basis of taxation which they have in Malta is a real key area. I mean. And the basis of that being that if you are resident but not domiciled in Malta, then what is known as a remittance basis applies, which means that you're only taxable on Malta source income and gains, and in respect of foreign income, only to the extent that it's enjoyed in Malta. So, I mean, quite clearly that is going to make it a popular jurisdiction from a personal tax point of view.
What about on the corporate side then? You deal often with the owner managers who look at both sides of the coin. What would you say on the corporate side is attractive?
Well, I mean, there are clear draws there as well. And when you start looking at these things purely from a tax point of view, which I don't like people to say it too loud, but tax isn't the most important thing in the world. But that's just between us. But the tax system is a draw in Malta as well, and essentially the corporate position is we can on trading profits we can essentially lock into an effective rate of 5%, and although if you look at your tax sort of table online or whatever, the corporation tax rate I think is 35%. But if you're paying up the profits to a shareholder, then you get a credit of 6/7, and my rather ropey maths does lead me to the conclusion that it's a 5% effective rate in the end, and that's something really which has attracted clients in the UK to establish businesses in Malta. Clearly, they've got to have you want them to have the overseas clients, the overseas income to justify it. There's no point to having a scrap dealer in Halifax or something like that setting up through a Maltese structure. It simply isn't going to be effective. But if you have got genuine clients with genuine overseas income, then it is an option. And I think perhaps looking down the line with UK rates increasing to 25% in 2 years' time, then perhaps things start looking more attractive. And I think the one sort of thing to be slightly wary about is perhaps how Brexit might impact on that position a little bit.
Okay, so we're gonna get into Brexit with Sarah shortly, but what's your perspective on then some of the Brexit challenges? What are the sort of keynotes that you're looking at or seeing down the line issues?
I mean, from a tax perspective, I think it's already given us some serious food for thought, and I don't want to step on Sarah's toes, but I mean, in the recent budget, for example, the UK did repeal the EU interest and royalties direct. I think it's repealed from June effectively, and that at the very least means that we've got to consider withholding tax on the payment of royalties or interest by UK companies to companies in Malta and companies in other EU jurisdictions where perhaps we didn't have to necessarily do that before. Now we have to look at the what the treaty says, and obviously Malta does have a good treaty network. But if commonly, I think Malta has been used for sort of as an IP holding location. But now, if you have a UK company paying a royalty to a Maltese company, then under the treaty, you're looking at a 10% withholding rate, rather than it being within essentially the directive. So, and you will see differences for different EU countries. So I think Cyprus is 0%, for instance. So I'm not necessarily saying that it changes the field, but I think you've got to go and revisit these things and make sure that something that maybe added up a few years ago will do post Brexit. I think there are other points as well, so I don't want to take up all the time, but I think in the UK, where we've been looking at setting up overseas structures, we're familiar with lots of different UK anti-avoidance rules which apply, and we've been kind of fortunate that most of those now have an EU defence written into them. It's not sort of an esoteric sort of defence. The legislation has been forcibly changed in some circumstances by EU sort of influence. So it'll be interesting to see how they go. over the next few years. But I suppose on the flip side as well, we've also don't have the joys of DAC 6 in the UK. Well, certainly most of it anyway. But I think generally it's accepted. That's because the UK has obviously DOTAS and many other sort of similar provisions. No, I'll shut up now. Sorry.
Well, just finally, I was going to say, Andy, on the QROPs and pensions front. I mean, just briefly, how do you see that space at the moment?
Well, I mean, it's an area that's interested me for a few years. I think Malta has, been a strong jurisdiction for international pensions for many years. The QROPs, and I don't know whether people listening are generally familiar, but at the basic level, it allows you to transfer, I suppose, funds from a UK registered pension scheme, which will have benefited from lots of tax relief over the years, and you can transfer them to an overseas scheme without paying a tax charge if it qualifies as a QROPS. Malta is very popular as a jurisdiction. There's been a tightening of those rules, 2017, I think it was, where the government brought in legislation which says that the starting point is actually when you transfer those funds to an overseas pension now, there is a 25% tax charge unless you're resident in the same place as where you set up your pension scheme, or alternatively, the scheme is established in an EEA jurisdiction. So again, that made, I suppose, re-emphasised that Malta's position there, and perhaps at the expense of places like the Isle of Man, for instance, which unless you're moving to the Isle of Man, you have problems with that overseas transfer charge. I think Malta must be at least on the front row of the grid there.
Okay, perfect. All right. Well, thank you very much, Andy, for laying out that context. Sarah, just to bring you in on Brexit. I mean, Andy mentioned there an interesting point around royalties. And before we get into the couple of examples, I mean, was there any thoughts on what Andy mentioned there about that point on royalties from your perspective?
Well, I think it would be good to see how things have been developing in Brexit. Before getting into royalties, I wanted to give a particular update, even maybe with respect to the financial services sector. And it's been just over 2 months, exactly since the post-Brexit deal with the EU has come into effect. Now, what we've seen upon closer examination of this trade deal is that there seem to be a set of comprehensive rules that govern the financial services sector seem to be absent from the deal, which essentially means that financial services firms in the UK have lost their passporting rights. So what has been happening in the meantime is that there's been this equivalence system which is being used, but basically EU legislation does allow for certain equivalence decisions, but at the end of the day, there is a general lack of clarity on this process and on how things are going to work going forward. And the general opinion seems to be that the EU will not recognise UK's rules as being equivalent to their own, which essentially means that UK firms are not going to be able to trade freely with the EU as they used to in the past, which presents problems for UK firms who do have an EU customer base and wants to keep doing business in the EU. Therefore, it's at this point that co-location in an EU jurisdiction does become key. And this is where Malta does come into play, because it's been a very attractive jurisdiction and it continues to be an attractive jurisdiction, not only for example, financial services, but then you break it down into funds. And I know that's something that JP is going to be discussing further on, and also insurance and other financial institutions in general. And Malta has always enjoyed a unique relationship, so to speak, with the EU. So we have our legal system, which is very much based off the UK one. Our legislation is in English. There's ease of doing business because, English is an official language in Malta. And we also, as Andy mentioned, have a very attractive tax regime, which continues to add to Malta's attractiveness as a jurisdiction in general. So with respect to financial services, Yes, although it seems that through the deal, companies have lost their passporting rights, Malta can then come into play and be used as an alternative jurisdiction in order for companies to continue taking their business forward.
Okay, thank you. And that could be everything from a wealth manager dealing with individual private clients to a fund manager, as you said, and we're going to get into funds with JP. On the trading company side, I mean, what about those businesses that we read about in the press in the UK having issues if they've got an EU customer base? Is there anything that can be used to help there? I know it's a difficult scenario.
Yes, well, with trading companies in general, the issue is that obviously, since they no longer form part of the EU, there are going to be additional charges. So we're speaking about additional VAT charges, depending on certain criteria. We're also looking at custom duties and additional tariffs, which may be applicable, which essentially are going to make businesses less competitive, you know. So we have also been seeing movement in this respect, where companies are either going to be looking at other EU jurisdictions or coming to Malta in order to avoid incurring those extra charges and to continue having their business, which remains ultimately competitive.
But for the export of services, that's where we're looking at, whether it's financial services or other types of services where they're dealing across the EU bloc. That's where the compelling part of the co-structuring, as you said, co-location is. Okay, and did you have? Was there any comment on from Andy's point on royalties and IP protection, or that's still it's a new area that views are being formed on? Sarah, just asking on building on Andy's point, or is there, if there's nothing more to add, there's no problem?
There's nothing more to add from me.
Okay, no problem. So just bringing in Albert Cilia from Trident Trust. Welcome, Albert.
Good afternoon, everyone.
So I've been down to Malta a number of times and deal with a lot of professionals down there, and I'm always struck by the kind of can-do approach, innovation within a robust regulatory environment. And what I wanted to do was get a sense with you on some of the innovation that's going on that's being used to support businesses kind of across the EU. One of the areas that we were discussing was around securitization vehicles. It's an area of real cutting edge innovation. Perhaps you could explain a little bit about how these are being used, the types of scenarios they're useful for.
Yes. Okay, so starting from the principle, I mean, we're not going to be saying that Malta has invented securitizations or reinvented the wheel here. I mean, it is a practice which has been used in the financial service industry. I mean, the historical basic model was for banks to de-risk their portfolios at times and move out certain assets/liabilities of their balance sheet. Okay, so that's what the historical model was. Many people think it's a replacement for funds. One could have a discussion about that, but definitely it should not be seen as a sidestepping the full regulation which a licensed fund would require locally or in other European jurisdictions. Because yes, definitely securitizations are not as highly regulated as a full licensed funds, whether be it a PIF or an AIF or a NAIF for that matter, and is usually more lean from an operational perspective to operate than a full licensed fund. As the term implies, securitization is effectively securitizing some form of asset which would otherwise be potentially illiquid. Okay. But similar to the fund, the securitization vehicle is as well fully tax efficient, like a Malta fund or like any other fund in European Union jurisdictions. The scenarios vary. Okay, so I gave the basic example of the historical model for banks. Sometimes you talk of vessels, but for example, something which I mentioned even in our discussions before this meeting is we are working, for example, on a model on a client which is based in the UK, whereby there are legal claims, so to speak, relating to probably most of us recall this, what is referred to as the LIBOR scandal, where people have made claims against a number of banks. I think back in the day, there were some 16 banks who had abused of the whole LIBOR rate, so to speak, system. and where there are firms in the UK who will actually buy these claims from individuals like yourselves and myself, and wrap them up in a pool and put them in a securitization vehicle as the asset, and issue a note against such assets. Obviously, these would be bought at a discount. These people would have done their homework very thoroughly, know exactly the percentage of success and the margins which will be there, and the return is very easy there to calculate. We definitely are seeing a number of opportunities in that space. It is usually handled, because of the similarities of the structure, by our fund admin team, to be fair. Because although it would be serviced by our corporate service company per se, operationally the similarities to a fund are also so great that it makes sense that this would fall nicely within our fund admin team operationally. Okay. And yes, we are definitely, there's still a lot to catch up on. The big jurisdictions have again historically been Luxembourg and Ireland. There's no denying it. But the Maltese securitization vehicle is beginning to pick up and is beginning to be appreciated by other players in the market as a good structure for that type of business.
Okay, thank you. You also have a local stock exchange in Malta, which makes it useful in the planning. Perhaps you could explain.
Yes. No, that's a valid point. I mean, there are players who will then consider listing their note, so to speak. In Malta, we have 3 markets really: the primary, IFSM, and prospects. Primary is obviously the more onerous one, because that effectively is practically going down to the retail client, whereas the IFSM and the prospects are more professional investors, and the requirements are much more reasonable, etc. The attraction of getting the listing for your securitized note is that obviously you're opening it up to a bigger market. Okay, and it is a known fact that a listed instrument opens it up to also potential UCITS, pension funds, who would have as a requirement that the instrument being invested needs to be a listed instrument. So we're seeing people look at listing some of these notes locally, and usually it's more the IFSM and the prospects market, historically more the IFSM market, because it gives them that further credibility, and it opens up the market further by having a listing, by having an instrument which is listed, so to speak. And the listing process locally on the island is again usually not as onerous as you would find in other jurisdictions, but at the same time you are being listed on a European stock exchange, which in itself is an attraction, and it will help the marketability of the instrument if you want to go, so to speak, beyond maybe your friends and your partners, so to speak, in business. So yes, the listing is something which one could add in. It definitely has a benefit within the scope of certain transactions. Definitely.
Perfect. Thank you for that. Another big area of innovation generally is around cryptocurrency, and I know that both blockchain and crypto has been an area which Malta has tried to support the ecosystem. I mean, how do you see that? Obviously, prices booming away on Bitcoin, so it makes people more interested.
Yes. No, on the crypto side, and look, I will focus very much on the crypto side when it comes to funds and fund administration, because that is our area of expertise. Malta, yes, I would say a couple of years ago, was pushing very much on that area in general. I think there's still the judgment is still to come out on that. Maybe we are still developing from an infrastructure perspective vis-a-vis crypto and crypto funds in particular. As a group, not only as Malta, as a group, we've always not shied away from it. Okay, we've always been, I would say, clever about it and selective, so to speak. But we've never many of our competitors at the beginning not said no as a default, so to speak. And thanks to that, we've been doing crypto funds for the last 3-4 years. Obviously, as you said, now crypto is hot because we all know what's happening with Bitcoin, and not only Bitcoin for that matter. So yeah, I would dare say that probably we're not exactly back to 2 years ago where we would have a fund inquiry for crypto every week, but I would say that at least every couple of weeks a fund inquiry on crypto comes in. The beauty of funds and fund administration is that in many jurisdictions, and I think JP will be touching base on certain other jurisdictions as well, is that fund administration for other jurisdictions did not necessarily always be carried out in the respective jurisdiction. Okay? And that for us as a fund administrator opens a bigger market. Okay, in the sense, why am I saying it? And in the sense that we don't only do funds, direct funds engagements for Maltese funds. We do Cayman, we do Bahamas, we do other jurisdictions where it is allowed to do. The local office then, as Trident Malta, acts as a bit of a center of excellence for the group, in that we are acting as back office for a number of jurisdictions, including Luxembourg. But definitely direct engagements vis-a-vis crypto, we have both Maltese, but we definitely have Cayman. Cayman remains a very popular jurisdiction with UK managers. Okay, so for them sometimes it's a no-brainer to have the administration done in Malta from a time zone and from a cost perspective, although the fund per se is in Cayman, not necessarily Malta. And furthermore, I would say that many managers also want a European administrator, because banks usually feel more comfortable having a European administrator who is more aware and more comfortable with certain AML requirements than maybe other administrators in non-European jurisdictions. Because obviously with crypto, the emphasis on AML is even more relevant, if we want to call it that way. As a group, we have invested in crypto fund administration. So we have technology which helps us extract the data from exchanges, which I can assure you, especially a couple of years ago, was very, very challenging. So we had to invest in technology to facilitate downloading that information in a reasonable manner to be able to price those type of funds. We have developed relations with a number of exchanges, and now even, so to speak, custodians are beginning to come into the picture. The trend there is that many of the players want more regulation, unlike in other asset classes, so to speak. But yes, I would say we definitely have a head start, and we work with these technology players to kind of learn from each other, work together, so that the asset class becomes similar to any other hedge fund or private equity, etc., etc. In fact, and this is coming out even in our pricing. So whereas the pricing of a crypto fund 2-3 years ago clearly had a significant premium, this now it's becoming closer and closer to maybe a normal hedge fund, if we want to call it. But it takes time. It takes investment. Okay, and we're currently finalizing another deal with another technology player to enable us to even get detail on the audit trail of certain crypto once they're in the fund. And realistically, you have to embrace technology in this space. I mean, fund administration in general, one has to be technology driven. If you're dealing with crypto, even more so to speak. But yes, I think it's an area which Malta, as in our space, benefited from the whole, from a lot of the noise we did as an island, so to speak. But it had opened up us opportunities which go beyond Malta, if you want to call it that way, because fund administration per se is usually that type of business which is not as jurisdiction driven as maybe the services provided for corporate services or for trusts, so to speak. So it is much more of a universal service stroke language, if you want to call it that way.
Thank you. Thank you for that, Albert. Very, very helpful. Just to bring in JP Fabry now from Seed. Good afternoon, JP. You're on mute there, JP, sorry. Good afternoon and welcome. You can't. You there, JP? I'll just come to Andy quickly while JP just sorts his mic out. Andy, we were talking. Oh, were you there, JP?
Hello.
Ah, perfect. So just sticking with Albert mentioned there innovation, securitization vehicles, and then obviously reference the fact that there's a whole fund universe that's available through Malta, everything from applications for private funds through to institutional managers. Sarah mentioned that Brexit has thrown up a lot of opportunities. How are you seeing those opportunities coming through, particularly for like wealth managers and that private client focus part of the advisory market in financial services?
Yes, I think Malta has established itself as quite an innovative jurisdiction when it comes to using regulation, spanning a number of sectors, not only financial services. In financial services and in the funds, we have been particularly innovative with a NAIF structure, which is a notified alternative investment fund, right? And over there, that builds very much in terms of under the AIFMD directive. So basically what Malta managed to do over there is primarily issue a fund structure which allows people to go to market within 10 days of filing a complete notification pack. And the beauty of this fund is that it is totally passportable across the EU. So this opens up, I would say, unique opportunities post-Brexit, but also post some of the challenges that we've seen in some of the other jurisdictions, primarily Cayman and Guernsey, right? So Malta can be seen as becoming a gateway to the European market, because ultimately the alternative investment fund market remains quite significant and important. And I would say that it can only increase in a post-COVID world. The reason is that a number of distressed assets are going to start coming onto the market in the coming months. I would say, especially second half of this year, beginning next year. And I believe that family offices can utilize these fund structures to not only raise capital over EU, but also to use this fund structure as an SPV with other family offices in the EU to invest in these distressed assets. And the NAIF has a number of possibilities to also hold real estate, also hold 100% of an asset. And that is a quite important distinction to the other jurisdictions, including Luxembourg and Ireland. Malta's cost base remains quite competitive as well when you're comparing it to Dublin and Luxembourg. So over here, I think when we're looking at the NAIF, which ultimately is a passportable fund across the EU, it can allow for the setting up of hedge funds, private equity, and also venture capital.
Is there a minimum size, JP, sort of ticket that someone would need to look at in order to make that?
No, I mean, not really. I mean, if you're structured as a CCAF, your minimum share capital starts at €2,000, right? And there are no restrictions when it comes to the assets under management. I mean, then obviously you do have a business consideration in terms of that, where it really makes sense to go ahead. But I think the NAIF is has a sweet spot of anything in the region of 3 million, 5 million plus. And that makes it something which is extremely interesting on the European market. And I think Malta over here, I mean, this is just one case study of Malta using regulation to excel. Albert mentioned securitization, we mentioned crypto, but there is so much more also beyond financial services, which can be an option also of high net worths and private clients, also when it comes to aviation, when it comes to private aircraft registration, when it comes to yachts, when it comes to ships. So Malta usually uses asset registers in a very interesting manner. Then we also have the other regulated sectors, such as remote gaming, but also other areas like pharmaceutical manufacturing. So Malta, I would say, offers a gateway, especially in a post-Brexit world. And I would say that already in 2 months down the line, the pains of Brexit are being felt, or especially from a customs and regulatory perspective. So I think and I would say the mid-tier to smaller firms might not have seen or thought about a post-Brexit co-location. I think that now co-location is going to become high on the agenda. And definitely Malta, as Sarah mentioned, with its not only pro-business environment, but also English language being, an official language, legislating, common law, and all of that. I think we can actually put ourselves as a very interesting jurisdiction. Jumping back to the NAIFs, and also to try and tie to what Albert was saying, NAIFs also become very important from a tax efficiency point of view, because it's also a very tax efficient structure. And I think if you move forward, not to the next, but to the one after, to the next, I think over here we start seeing that there are a number of advantages happening at a number of levels, whereby there's no tax practically on the NAV, also from a withholding and at an investor level, and also from a capital gains tax perspective. So I think over here we managed to come up with a pretty unique structure, and the fact that it only takes 10 days from the submission of a complete notification pack to actually and then start selling your fund on the professional side, or raising funds through that within 10 days across the EU, I think that is something which is very strong.
Okay, thank you, JP. I mean, Albert, are you seeing similar use of the NAIF? I mean, it looks like a useful bit of kit for people structuring assets, as JP mentioned in the family office context, looking to snap up distressed property, private equity.
The NAIF was very much a welcome solution by all us players in the market. I mean, it clearly went to tackle the speed to market issue. Okay, so as we all know, getting a regulated fund up and going takes time. There's a process involved, whereas the NAIF has obviously brought that down to nothing practically, because it's as JP mentioned, it's a notification process, and the responsibility lies fairly and squarely with the AIFM himself, so to speak. Obviously, the opportunity of the NAIF is, as JP mentioned, is the cost efficiency compared to other jurisdictions. So you effectively have EU passporting rights at a fraction of the cost maybe of other jurisdictions who have similar solutions. So it is up to this date that Malta is still at least 50% cheaper in setup and maintenance of such structures compared to the Luxes and the islands of this world. So if you are a certain either as JP said, a family kind of business or family office, or you are a bit of a startup or an emerging manager, quite frankly, Malta is your jurisdiction. The thing is, obviously, the other jurisdictions have been at it more than us, but with certain size, realistically, and we have these discussions regularly with our counterparts in jurisdictions like Luxembourg. They won't even look at you. Literally, they won't even look at you. So Malta becomes your only realistic solution, so to speak.
Okay, thank you. And Andy, Wood, just to bring you back in, changing tack on how COVID has affected the way people are running businesses, the concept of the digital nomad, and you know, with the clients that you're dealing with in the UK, are you seeing changes in the way people think about the way they set up and run businesses? Does it make international mobility, moving to places like Malta to run an enterprise, more and more doable?
I mean, I think it's certainly something which is there on the agenda increasingly. So it's very, and it's very of the moment. And I think, I mean, really the kind of two, I think sort of two models which come up sort of repeatedly. I mean, the first is you go and base yourself in a single, you're sick of lockdown in the cold, wet, miserable sort of weather here, and you'd say, right, I'll go and live and work in Barbados under the welcome visa or something like that. I mean, that's a relative, other than obviously getting over there, I suppose it's relatively straightforward in that if you get the visa, then there's no local tax paid, and really the attraction for the local jurisdiction is that you're spending your money there. Really, I think the sort of second model is where you or the client comes to you with the plan of living in sort of successive countries, not staying anywhere long enough to become resident there for tax purposes. And I think it's for me that second model is quite a difficult one. I think it's technically possible to be a nomad, but I don't like it. I think there's always a danger if you're thumbing your nose up at multiple revenue authorities of jurisdictions that you might well end up with multiple jurisdictions after you for their fair share of tax. So I think my preferred route would be, as I alluded to, I think earlier on, would be, find a tax home, find a tax base, where the I suppose the tax regime suits you, base yourself there, and maybe go and visit other countries during that time. I think Malta has to be, I'm not looking for commission from the tourist board or anything like that, but I think it has to be a potential candidate. Running a business from overseas, as you're right, is increasingly straightforward. I mean, it's not Malta, it's Portugal. A client who's just gone to Portugal. 2 directors stayed in Liverpool. One's gone to Portugal. Under the sort of non-habitual sort of resident regime there, he can enjoy the dividends there, free of UK tax and free of Portuguese tax for 10 years. And I think you could get to a similar position with Malta with the remittance basis. The only difference being that if you try and use the income in Malta, then you would suffer tax in that scenario. So it's an option though.
Okay, thanks. And Sarah, just to bring you back in, I mean, as Andy mentioned, there's been a definite shift in what's possible through this period in terms of running businesses. I mean, have you, on the area of HQ relocation or entrepreneurs looking to move businesses and set up in Malta, what are the key trends there?
So there are a number of reasons why we're seeing companies either in the Middle East or in Asia who continuously look towards Malta for setting up a business. Most of them are already doing business with the EU, so it sort of makes sense for them to eventually open a base, and Malta, be it also because of the tax regime, is an attractive jurisdiction for them to choose as their headquarters, both to access the EU market, but also possibly even to access the Northern African market. But there are also a number of companies which are not doing business with the EU. So for them, it's a new market to access, which presents new opportunities, because setting up a company in Malta and being part of the European Union then opens up opportunities, for example, for EU funding, which still remains largely untapped across a number of sectors. But also, it's not specific to companies, for example, operating in the Middle East. So we've recently had a UK national, actually, who sold his UK business through the establishment of a Maltese company, and in the process of doing so, also decided to become tax resident in Malta. So Malta is attractive for a number of reasons, and also when considering HQ relocation, we always have a parallel discussion with our clients, obviously to look at residency options, possibly citizenship options, as Andy mentioned, there'll be tax on a source and remittance basis, so that can be very attractive to them. As a discussion obviously needs to happen in parallel. So we're talking about HQ relocation, residency, and also a general tax discussion, both on a corporate level and on an individual level as well.
Okay, thanks. Well, that's very, very helpful. We're going to now say goodbye to our YouTube audience, and we are going to head off to our breakout rooms